Hello and welcome to the Business Standard Banking Show. Tata AIA Life Insurance recently declared its highest ever bonus of rupees 1183 crore for participating policyholders for the financial year FY23. The bonus in FY23 is up by 37% as compared to the previous year. Naveen Tahilyani, MD and CEO of Tata AIA Life Insurance, is with us today. We'll talk about the company's performance and the future strategies. Mr. Tahilyani, welcome to the show.
Thank you. My pleasure to be here.
Tata AIA Life is the sixth largest private sector life insurance company in terms of the IRDA data on new business premium. There has been a steady growth in the recent years. What has been the strategy that has led to this growth?
So, firstly, I would just like to clarify that when you look at new business, we are a player which is very focused on retail business. And within retail, when you look at the annualized premium equivalent, last year was a very good year for us where we had about 60% growth on retail APE, and we were number 3 in the industry. And in fact, we are the only non-bank owned player in the top 5 on this metric. What is driving this growth, to your question, or what is driving this market position of number 3? I think first and foremost, we are a very protection focused player. And on protection, we have done some innovations on product in particular. But again, as per IRDA published data on retail sum assured, which is a measure of the quantum of protection that we are writing, Tata AIA was number 1 in the private sector with a 27% market share in the private sector.
Right.
And product innovation, focus on protection is driving our overall growth, where while we are number 1 in protection, we are overall number 3, as I mentioned. Second thing I think is we are very focused on some of our consumer metrics. It's quite important that every sale is a right sale for us. And that metric is something that we are very proud of. In fact, we are more proud of that metric than our growth of 60% last year. Because when you look at persistency data, which is now also published and available in the public domain, you will see that in the 13th, 21st, 25th, 37th, and 49th month cohorts, we are actually number 1 in the industry. And on the 61st month cohort, which is the 5th year renewal premium, we are number 2 in the industry. So when you take a kind of overall blended look, we are very proud of the fact that our renewal quality is the best in the industry.
Right.
The third thing I would say is, we've been working very hard to improve our consumer experience at every point of the customer's interaction with us. Claim settlement, which is what life insurance companies are here for. I think first, we are here to protect the customer.
Right.
And second, we are here to, pay the claims when the time arises.
Correct.
Last year, FY23 was a landmark year for us where we crossed 99% claim settlement ratio on the retail front.
In FY23, the growth in new business premium was almost 60%. What kind of growth you expect for the current financial year?
Where the protection gap in our industry, in our country, is 91%. Which means, very simply speaking, the quantum of protection that we should be writing every year should be 10 times of what it is. Now, clearly, that kind of tells you that this industry should grow at a very solid clip over the next few years. My own estimate is that this industry should grow back between 15 to 20% over this decade, over the next 10 years or so. And obviously, over the longer term, we want to grow faster than the industry. So we want to grow at least 25 to 30%. And that is the number that we would expect to grow this year as well. I think this year, it's going to be a slightly tougher year than last year. But overall, our expectation or our focus is to grow our. Again, I say we are quite focused on the retail front. We expect to grow our retail new business premium by about 30%.
Why do you think that this year could be slightly tougher than the previous one?
I think 2 reasons. It's more mathematical than anything else. The underlying opportunity. It's, if you look at last year, and you look at industry data on the retail side in particular, you will find industry grew at about 19% on retail AP. But when you break it up, it's a story of 2 quarters, quarter 1 and quarter 4. Quarter 4, there was a bit of a bonanza for the industry given the change in the tax regime, which was anticipated. And the industry showed very, very strong growth in Quarter 4. And when you look at Quarter 1, which was April, May, June of fiscal year 23, there was very strong growth because Quarter 1 of the previous year was the COVID Delta wave. So the industry had, kind of had a very tough time in that quarter the year before. I think after a long time, we have a regulator who is very dynamic, very focused on the developmental aspect of the industry, very constructive, very collaborative, working very closely with the industry to understand pain points and debottleneck them, while obviously maintaining the balance of making sure that we continue to be a well-regulated sector. So I think some of the regulatory tailwinds, in addition to the structural opportunity, will definitely continue to power growth over the next 3 to 5 years.
Also, if I can ask you, what is the proportion of participatory products and non-participatory products in your portfolio, and whether you will see a shift in this proportion?
So roughly speaking, participation products are about 15% of our retail business last year. Non-participation, which is guaranteed rate products, are about 45% of our business last year. I don't expect this to shift materially this year or even over the medium term. The reason being actually, one of the reasons our persistency is amongst the highest in the industry is that it is very transparent when you sell guaranteed rate products. When you sell a participatory product, the outcome for the consumer is a function of the ultimate earning rate of the investment that is made. And, we all illustrate as per IRDA mandate, what will the customer get at 4%, 8%. But what exactly they get is a function of what the company or the investment earns. Whereas in non-participatory, because it is guaranteed, it is very transparent to the customer what they are going to get.
Right.
And therefore, when they buy the product, there is no misunderstanding, there is no misconception, there is no scope for missell.
Is an IPO is in the sight?
No, not really at this moment. I think unless IRDA mandates that companies of a certain scale and size need to list, we have no immediate plans to list. The reason being pretty straightforward, that we are very well capitalized. Our solvency ratio is more than adequate at this moment. And should we need capital, I think both our shareholders, Tata Group as well as AIA Group, are very committed to injecting that capital. So there is no reason to go to market to raise capital.
Now, as you said that you are one of the top players which is not sponsored by a bank. So, but you have tied up with 5, 6 banks, I believe, as a bank assurance partner. What is the share of premium from the bank assurance products, and how is the plan to increase it?
So we do work, as you rightly said, with a lot of banks, private sector, public sector, foreign sector, all natures, large banks, small banks, banks which are more retail oriented, banks which are more HNI and affluent oriented. And we are very privileged to have these partnerships. These are all partnerships in the open architecture, which, by the way, has been also one of the recent enabling reforms by Mr. Panda and his team, where now it has become even more open architecture. Banks can work with up to 9 life, 9 general, 9 health insurance players. So we are participants in this open architecture where we compete on the strength of our brand, on the strength of our product, and on the strength of our process. There is no shareholder affiliation, of course, that we enjoy in any of these partnerships. So today, to answer your question, bank assurance accounts for about slightly less than 50% of our total new business premium on the retail side. And this is distributed across 6, 7 banks that we work with. So it's not that, we are dependent on one large distributor. At the same time, while we have been growing this bank assurance premium strongly, what we are equally or probably more focused on is growing our own proprietary channels, our own agency, our own direct sales force, and our own web sales or digital channel. And just to give you some numbers, last year, our agency channel grew by 73%. So while the company grew at 60%, agency grew by 73%. And in agency also, we have a very differentiated strategy of focusing on what we call premier agency. We
Right.
want agents to work full time with us to earn a living from us. And one metric I would like to share with you is what is called MDRT, which is the global gold standard for most productive agents. Very happy to share that last year and the year before that, Tata AIA was number one in the count of MDRTs in India. And in fact, last year we touched 2000 MDRTs, 1985 was the kind of exact number last year. And we are quite committed to this journey. In the last 2 years, we have added 200 branches, 100 branches each, to support our agency and to drive penetration in line with the opportunity that exists, as well as in line with the regulators' mandate to deepen penetration. This year, we've got approval from our board and from the regulator now to add another 110 branches. And I think, broadly speaking, I expect us to continue to add 100 branches each over the next, 3 to 4 years.
You talked about your agency force. Now the IRDA new regulations gives some flexibility to the insurance companies on commission. Will you offer a higher commission to agents and other distributors?
So first, again, this is a sign of the progression and the focus on the development agenda within the IRDA, which I was talking about earlier, that now there is more flexibility on creating commission structures. I don't think this will result necessarily in higher commissions. Our approach is a little different. Given that we have this commission flexibility, what we are trying to do is make sure that for certain products which are good for the consumer, we are able to offer higher commission there. I'll give you a very specific example. Pension products. Earlier, the commissions were capped at 7.5%. Now, as part of this commission flexibility, we can increase the commission. We have, in fact, increased the commission on pension products already. And, that is a good product for our agents to take to the customers. So that is one change that we have brought in. Second, as I was saying, because we are very focused on renewal and quality of sale, we will look to link more and more of the commission of our agents or distributors to quality of renewals that they bring, or to the quality of assets under management. If I look at things like, unit-linked products, which we don't sell much of. Like last year, unit-linked was less than 20% of our total premium, new business premium. But you can kind of incentivize distributors now to make sure that they encourage customers to stay on for longer in the unit-linked product. So some of those changes of linking commission to renewal performance, to assets under management kind of performance, and selectively tweaking commission in products like pension or some aspects of protection is what we will do. But very excited about this change, because while these may sound like minor changes, what I'm talking about, when you look at the impact of all of these on the quality of our business and the growth it can bring, it is very, very material. And this is something, we and I'm sure the entire industry is actually very thankful to the IRDA for.
So on that note, thank you, Mr. Tahilyani, for speaking to Business Standard. It was a pleasure talking to you.
Likewise, the pleasure was all mine. Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.